Todd Martin. He's Chief Asian Equity Strategist at Societe General and says that we may see a rally in the week ahead. He joins us from Hong Kong. Todd, you may see a rally in the week ahead. No sign of it at the moment. A lot of nervousness out there. Asian stocks right down, European futures pointing to a similar picture.
I agree with you. It's been a pretty ugly day in Hong Kong. I guess there's three things. One is we've had property numbers out of China. I think you have to differentiate between primary and secondary numbers came off 0.05%. So the market took that, I think, a little more negatively than it should, but it did take it very negatively. We also obviously have the region waiting on Greece, and so we have a bit of contagion there, and there just seems to be a bit of a run towards liquidity and away from risk. So that's hitting everything, but I want to keep everybody in mind that valuations and expectations have been downgraded steadily throughout this year, and if anything, we see some value. And when Bernanke comes up with Operation Twist and possibly something else on later this week, I think markets are going to be buying into this, if anything.
Okay, where exactly, Todd, do you see the value? Which industries, and can I ask you which specific stocks are interesting you now this week?
Well, in several areas. I think 8 shares for China are particularly cheap. The Hang Seng Index is very, very cheap. And when I say cheap, you can buy it on 7.4 times 2012 earnings. The cheapest that you've had in 15 years, except for the depth of the 2008 crisis. We also think India and Korea are particularly cheap. Now, sector-wise, we're looking for those that benefit from falling input prices. So, for example, steel is going to do particularly well with iron ore that will be coming off, so long as there is some economic growth holding in for them. We have seen some buying into the shipping sector, which has been utterly devastated by falling prices throughout the year. So that's one thing. And to tell you where value is, I'll use an example. Power asset that used to be Hong Kong Electric in Hong Kong, 6HK, it gets a yield of 3.7%. It's priced for X growth, and this company has steadily outperformed the Hang Seng Index for 30 years. So you're getting really, really crisis valuations, the sort of stuff I haven't seen since the Asia crisis in 1998.
Todd, we know in this global economy no one's immune from a debt crisis in Europe or a debt crisis and slowdown from America, but I'm just wondering to what extent you think Asian markets are more isolated from the woes certainly we're having here in Europe.
Well, I think that's been a general debate over the last 10 years, the whole idea that Asia can decouple from the overall global cycle. And I think you have seen overall just domestic demand plays in Asia have been outperforming. And when I use those terms, I mean things like financials outside of China, things like department stores, consumer plays. In the A-share market in China, for example, you've seen a huge outperformance in consumer plays. So I think you can, but at the same time, there's a large amount of doubt that we can remain completely immune to obviously a global trade trend that seems to be kind of plummeting, and this is all being brought on by the U.S. slowdown and then the contagion out of Europe. So there's a big debate. And the other part of this is the huge amount of credit that's been built up in China over the last few years. A lot of people believe that we're going to get another financial crisis. There is a lot of debate. I personally don't think we're going to have a crisis in China. I think a lot of the debt problems will get pushed out to 2013 because of the political change that's going to take place there in 2012.
Okay, Todd Martin, really great to talk to you. Thanks very much indeed for giving us your input in today's program. Todd Martin, equity strategist, Societe General Asia.